How's it going, YouTube? My name is Ari and welcome to Blue Lion Finance. If this is your very first episode stopped by the channel, it is all about investing in my personal journey to amassing $100,000 with my Vanguard brokerage account. Now, the market has been building a ton of momentum within each index. My personal account is actually up by $1,141.84, bringing my account to a brand new record high yet again.
My life is good. Really good.
Sitting at $91,177.32 on the day. In terms of today's video, just given all of the momentum across the board, what I want to get into are 5 high-quality dividend stocks that are still on sale and still trading at a heavily discounted price. So perfect and ripe for picking for your personal portfolios. A video you're not going to want to miss out, and make sure you tap on that thumbs up button and help me grow this channel. And of course, if you haven't done so already, go ahead and subscribe to the channel while you're at it. I want each and every one of you on this journey with me. Now, YouTube, let's go ahead and dive right in. Just want to start us off with a bit of a state of the union, if you will, in terms of what exactly is happening and why we are seeing all of this market momentum being built. And in my personal opinion, it is because investor confidence or investor certainty is actually growing stronger. And in taking a look at the market as a whole, what we're seeing is that without all of this new news and fear-mongering headlines about Russia and Ukraine, investors are certainly feeling more confident in throwing more money into the stock market. On top of that, we also have the Federal Reserve that has really doubled down on their stance in terms of fighting inflation. And last but not least, while we are in fact seeing COVID-19 spikes across mainland China and well into Europe, the United States has not yet experienced those spikes, and the American media has not yet been penetrated by such news. Therefore, the US market has almost been untouched by that news, and here we are with a lot of momentum being built across the past handful of days. Now, this all leads me into today's video and talking about these 5 high-quality dividend stocks that are all trading, in my opinion, at still discounted prices. The very first stock opportunity on the list today, we're talking about Verizon, ticker symbol VZ. Now, Verizon, as many of you are probably well aware, is America's largest wireless carrier, serving roughly 91 million postpaid and another 4 million prepaid phone customers. Now, since its founding in 1983, Verizon has been able to pride itself on its network's quality, consistently investing in latest technology to lead its industry. Speaking of which, while their share price over the last couple of years hasn't exactly been soaring, a matter of fact, it's done quite the opposite, falling from around $55 a share down to around $51 a share. That is about a 7% change, all because investors are concerned about the capital-intensive build-out of 5G networks. And in a world of software, telecommunications companies aren't exactly in favor any longer. However, as a long-term value investor, Verizon still remains gold, in my opinion, to have within your portfolio. It has 40% of the postpaid phone market. And even more exciting news, Verizon recently came out to announce their strategic partnership with Meta to build out the brand new Metaverse. Now, with their PE ratio sitting at 9.64, I find it a ripe time to snag up more shares worth of Verizon, especially as analysts look into their future and not only see a rebound, but the stock soaring past some of their record highs here, coming in at a median stock share price at $58.50 and a high stock share price sitting upwards of $72 per share. Now, until it reaches those high stock share prices, we're just collecting on Verizon's reliable dividend, coming in at a dividend yield of 5.02%. Next up, I want to talk about one of the largest financial institutions within the United States. We are talking about JP Morgan, ticker symbol JPM. Now, JP Morgan has over $3.7 trillion in assets. We are talking about a bank that is just far too big to fail. They have various financial products and services across traditional retail, commercial banking, as well as asset management and investment banking. Since their founding in 1799, JP Morgan has been able to grow a market capitalization sitting just under $420 billion. Now, as all of the financial institutions across the board have been hit pretty hard over the past couple of years throughout the pandemic, as well as recent volatility with the war between Russia and Ukraine, JP Morgan is certainly taking a hit, falling from around $168 all the way down to around $141 per share. That is about a 16% change. Now, get this, their PE ratio is sitting at 9.24. I couldn't think of a better time to invest in such a high quality bank. Again, one that I believe is just far too big to fail. Investors have that very same confidence in JP Morgan coming coming in at a median stock share price at $175 per share and a high stock share price coming in at $200 per share. So quite a lot of room for it to run right back up. Now, I couldn't think of a higher quality bank to invest in, especially with JP Morgan's dividend coming in at a dividend yield of 2.86%. While they haven't been increasing that dividend year over year, they have in fact been consistently paying it out year over year since 1990, making JP Morgan a very reliable dividend investment to have within your portfolio. Moving to our third stock opportunity on the day, I want to talk about a lesser known company that's not often spoken about. It is VF Corporation, ticker symbol VFC. Now, VF Corporation is a giant apparel company that was founded back in 1899 and has grown a portfolio of lifestyle brands including Vans, the North Face, Timberland, Wrangler. In addition, VF Corporation offers occupational, athletic, and licensed apparel. So we're talking about clothes that have to do with MLB, NFL, Harley Davidson, and plenty more. Its market capitalization has certainly grown over time, where it now sits at $22.3 billion. Now, amidst all the recent volatility, and especially with the inflationary pressures, VF Corporation's stock share price has come down from $75 per share all the way down to around $57 per share. That is creating about a 24% change. And again, another ripe opportunity for all of us long-term value investors getting invested into a company like VF Corporation, which is the world's largest apparel, footwear, and accessory company, as their PE ratio is hovering around 16.17. And most importantly is just looking into their future, where analysts foresee, of course, a rebound in sight, coming back up to a median stock share price of around $71 per share and a high stock share price coming in at $97 per share. But until it reaches that rebound and even then some, we're just collecting on VF Corporation's dividend. Now, it is nearly a dividend king with dividend payouts and increases year over year, and their current dividend yield sitting at 3.59%. As for our fourth stock opportunity on the day, it is a company that I've been talking about from video to video a whole lot rather recently because of its undervaluation. Now, it's been undervalued for quite some time, but we're talking about T. Rowe Price Group, ticker symbol TROW. T. Rowe Price Group is a global investment management firm. It was founded back in 1937. It has grown into a leader within the industry while building up its market capitalization, where it now sits at $33.9 billion. The vast majority of its assets linked to the stock market, and more specifically with the NASDAQ. When the market actually gets incredibly volatile, T. Rowe Price actually takes a massive hit, which is exactly what we've been seeing rather recently over the past handful of months. The stock share price of T. Rowe Price Group has been plummeting. It originally fell from around $200 all the way down to $134. That created about a 32% change. Rather recently, it has already begun to rebound along with the rest of the market. It has climbed since then to around $148 per share. Nonetheless, that is a 26% change and a ripe opportunity to take advantage of picking up T. Rowe Price Group, a standout investment for the long-term dividend investor, especially while their current PE ratio is hovering around 11.35. Now, analysts looking into their future do in fact see a very strong rebound on the way, coming back up to a median stock share price of $159 per share and a high stock share price at $198 per share. But we are here for their dividend. They've been paying dividends out for 36 consecutive years, increasing that dividend year over year, making T. Rowe Price Group a dividend aristocrat, very reliable, and their current dividend yield is coming in at 3.23%. And last but not least, we have our fifth dividend stock of the day. It is the most discounted stock opportunity out there, at least in my opinion. We are talking about Stanley Black & Decker, ticker symbol SWK. Now, Stanley Black & Decker is a heavily diversified global manufacturer of tools as well as related accessories from mechanical, electrical, and engineered fastening systems. Since their founding in 1843, they have become an industry leader and have seriously brought some of the most well-known, iconic, trusted brand names to the market, allowing for that market capitalization of theirs only to continue to grow over time, where it right now sits at $22.6 billion. Of course, in 2020, Stanley Black & Decker saw an explosion in terms of their share price, just given all the DIY projects as well as the home improvement projects that were underway. However, since then, that has slowed down. Their stock share price has actually been coming down. We can see it fell from around $198 per share all the way down to around $138 per share. That is about a 29% change, but you guessed it, what a ripe opportunity we get now to take advantage of Stanley Black & Decker, a company that is not going to be disappearing anytime soon. Of course, as we round the corner on the pandemic, we fight inflation. Stanley Black & Decker's stock share price is certainly going to go right back up, definitely according to analyst expectations. Coming in at a median stock share price of $221 per share, a high stock share price of $250 per share. Now, their PE ratio is currently hovering around 14.38, and most importantly is that dividend of Stanley Black & Decker's. They're coming in with an incredibly strong and rich dividend history with 54 consecutive years worth of dividend payments and increases year over year, making Stanley Black & Decker a dividend dividend king. Talk about reliability. Now, their current dividend yield is sitting at 2.24%. Now, there you have it, YouTube, from Verizon, JP Morgan, VF Corporation, T. Rowe Price Group, and Stanley Black & Decker, the 5 high-quality dividend investments that you can get invested into right now. The rest of the market is certainly building up upon all of that momentum. These 5 dividend investments are certainly undervalued, and for that long-term value investor, now is the time to get invested into any of them. Now, if you like what you heard, you learned something new, please drop all those comments below. Let me know your thoughts on any or all of these companies, if you have them in your portfolio or if you're planning on investing. Now, do keep in mind that I'm not a financial advisor, so always just make sure you do your due diligence prior to making any investment decisions following my videos. But before we conclude, you know what to do, and tapping on that thumbs up button and helping me grow this channel. And of course, if you haven't already subscribed, make your way over to doing so. I'd certainly love for each and every one of you to be on this journey with me. Now, YouTube, I will see you all in the next video.